What's going on, everyone? Welcome back to the channel. So in this video, I want us to discuss our end of the year predictions for the HEX price. So if you like this kind of quantitative and technical hybrid analysis, leave a thumbs up, be subscribed by the end of the video. If you aren't already, let's get to 2,700 subscribers. We're well on our way. And let's go ahead and talk about this set of end of the year predictions, because it depends, right? And we're going to look at a bunch of models that we've been looking at on the channel that are actually hosted on the website, LookIntoHex.com. We're going to look at all of these into a consolidated set of predictions. Obviously, none of this is financial advice. This is just a bunch of models and seeing where they potentially converge. Okay? And all models are created to the discretion of the analyst. So let's go ahead and talk about this. First of all, we're holding nicely above our 20-day moving average, 21-day EMA ribbon, which has historically been support, and yeah, we wicked down to 7.4 cents after a high of about 9.95 cents, so almost 10 cents. And I want to point out that we don't actually have to test, for example, this wick again. This could be your theoretical downside risk, if you want to call it that, or if you want to just maybe buy in a little cheaper. But then again, traders often get left behind. So there's this quote that I keep posting on questions in the comments saying, should I buy now? Which is, the best time to plant a tree was 20 years ago. This is a Chinese proverb, I believe. And the second best time is now, which says, like, if you have a long enough time horizon for something, then what's the point of waiting another day, right? Like, why wait? So this is where we are now. And let's get into the actual macro, right? If you go to LookIntoHex.com, we added our fair value model, right? Actually, let me show you here that we used to only have 4, our regression rainbow, heat maps, HEX versus BTC, HEX versus ETH. Now we have our fair value and our quarterly ROI as well. So our fair value we've talked about, where this green curve is the same as the green curve on our exponential regression rainbow. And this pink curve is our N-day moving average, which we're calling our fair value. Okay, and it's all explained up here in the overview, but all you really have to understand is that the fair value is actually a really good approximation, a really good fit to the actual mean itself. So both of these combined provide, in my opinion, a model for the fair value of HEX. And at this point in time, actually let me show you these 2 charts beneath it, what they actually mean. So this is in the framework of US dollar price, right? And these bottom ones are normalized to a different framework, a different scale. This one is normalized to this green curve, so the mean, the same exponential regression green curve on the rainbow. And this one is normalized to the fair value, which is our calculated value, which is our end-day moving average. So that's why you see that the pink line here is flat, here the green line is flat, and here, again, it's normalized to price, which continues to move up. So these attempts to give you an idea of your extension away from some sort of mean or fair value. As you can see, we've been as far overextended as 4.5x on this chart, as low as 18.7% of our fair value, so like a 5x away. So more or less a 5x beneath, 5x above. This chart a little more than a 5x above, and about a 5x beneath, more or less, but they're slightly different. I wanted to give you both angles. And you can see that currently we're just right beneath our fair value, so to speak, which tells us that if we were to have another bubble like this, then we could be looking at a 5x, a 5 to 7x in the near future, which takes us into more context for our end of the year prediction, because this is a big approach, right? This is a macro approach, taking a look at a bunch of models, trying to find convergence amongst these statistical models to give us some idea of where we could be at the end of the year. But obviously it depends on a few things. For example, here let's pull this up in Paint, right? Our Fibonacci regression rainbow, because I want to show you a few scenarios, right? Where let's assume that price stays within our regression rainbow until the end of the year. Then that tells us that our minimum value would be right here, because this is January 1st, 2022. And our maximum value would be over here under this assumption, right? Which might not hold true, but we're just having a thought experiment here. So assuming that price will stay within this set of curves, then these are our boundaries for price. Now, given the fractal that's been playing out, well, maybe something happens like this where we have a bubble in the coming months, right? Where once we broke yellow, we went to purple, back to blue, kind of oscillated around purple, and then up to the pink. So if we went up to the purple and then came back down to blue, maybe it takes a bit longer, and then we form another move that takes us up to the pink, right? If we have our bubble here, then you could argue that price at the end of the year wouldn't be a top, but it might be a minima or a low. Something like this, where at the beginning of the year we were actually low. If you look at January 1st, 2021, it was actually a local top. So anything can happen, really. But this is one scenario, just one scenario, where we have a summer bubble, right? Maybe July, August, September. And then we maybe do something similar where we come back down, oscillate to this would be if the fractal played out almost perfectly, right? Which it's almost guaranteed not to. And then something like this, maybe a final capitulation. So this could be one path to our end of the year prediction, right? A local bottom. Something else could happen, right? Where instead of something like that, we actually take longer to form our bubble. Maybe it takes until the end of the year to form our bubble, right? Where we might come up and it might take a bit longer. We might not break right through the blue. We might oscillate around it. And then maybe it just takes longer. Maybe a fake out, market cycle's different, and it's just a longer cycle, right? Maybe it doesn't play out over the course of just 30 days like it did last time. Maybe it's more methodical, more thought out, and we end up at the top of it. So this is one thing that could happen, and anything in between, right? We could have a situation where, and I don't want to bore you with just a bunch of hypothetical situations, but you know, the bubble here could lead to something where we end up in the middle of it, right? Somewhere in the middle of it. So at the end of the day, anything can happen. If we look at January 1st of 2022 on our model here, then we see that it starts at about 25 cents. 25 cents was the bottom of that thought experiment, and the top of it sits at $5.20, more or less. So anywhere from 25 cents to $5 is our end of the year prediction. I know that was probably very anticlimactic. That's what the regression rainbow says, right? 25 cents to $5. It's a very wide range. If you want to constrain it to maybe these, like just squeeze it a little bit between orange and purple, then you'd be talking about 50 cents to $3. And again, if you want to tighten your range, 76 cents to $2. If you want to keep it just smack dab in the middle, then you're talking about $1.14, $1.15. So if you're being extreme in either direction, then you're talking 25 cents or $5.50. If you're talking just midline, fair value average, so to speak, you're talking about $1 in the year. So again, our heat maps, we are far away from our previous peak of 1 here on this normalized chart. We're at about 40% of our previous peak, which was here back in this last bubble when this heat map turned pink. And if something similar were to happen, well, we're a good 3x away, more or less, on the risk metric. Whereas, again, remember that this corresponds to the slope of the 100-day moving average, which depends on price moving up. So price would have another bubble up into the potential, right? If we had another 10x, like what happened over here when the risk was at similar regions, then we're talking about, well, our recent top was 10 cents, so that would put us at around the dollar level. And again, it might not happen as quickly as this time. Maybe it's more methodical and takes longer. End of the year, I believe, is day 750 or so. So I should probably extend this out to like day 800. This is the heat map on LookIntoHex.com. We can look at our, day 750 over here, which we're overperforming, but day 750 or so is about 111x. We're actually overperforming, so we can get rid of that chart. If we look at the HEX versus Ether chart, day 750 or so, which corresponds to end of the year, corresponds to what, 180x. We're pretty much there, so we're overperforming there. So I'm thinking $1 is a reasonable end of the year prediction, if not higher, if not a little lower. But I do think it'll end higher than where we are now, right? 25 cents to $1 is anywhere from 2.7x or so to over 10x. So none of this is financial advice or generic disclaimer, but I do think that my end of the year prediction would probably stand anywhere from 50 cents to $1. We'll see. That's pretty conservative for some people. Some people are calling for multiple dollars, but only time will tell. This is the chart. A nice candle on the weekly. Indecision candle it looks like, but slightly airing more towards the bullish side. We'll see where we close the week. Keep you updated. Thank you so much for watching. I appreciate you. Leave a thumbs up if you enjoyed this kind of quantitative hybrid technical analysis. Check out the new charts on LookIntoHex.com. I didn't even touch on it yet, but we might touch on it in a future video. We have our quarterly ROI. We've actually talked about it already. So I'll leave it at that. Be subscribed. Let's get to 2,700 subscribers, 3,000 by July 1st. And I will see you in the next video.